Altria versus British American Tobacco, a head-to-head showdown. If you're dead set on dipping your toes into the tobacco waters, which company should you choose? Historically delivered greater returns, and which one is a bigger cash cow now? Let's break it down. Altria, Pro's dominant position in the US market, strong dividend history, investing heavily in reduced risk products. Cons, heavily reliant on the declining US cigarette market, facing intense regulatory pressure. BAT Pro's globally diversified business, wide range of brands, strong presence in emerging markets. Cons, exposed to a complex web of international regulations, long-term success of reduced risk products uncertain. Ultimately, the best choice for you depends on your individual risk tolerance and investment goals. Altria. The name might not ring a bell, but their flagship product, Marlboro, certainly does. Altria is the quintessential American tobacco giant, deeply entrenched in the US market. They've been around the block, weathering lawsuits, regulations, and shifting consumer preferences. Their strategy? Adaptation. Altria knows the cigarette market is shrinking, so they're hedging their bets, investing in alternatives like smokeless tobacco and even cannabis. Think vaping products, heated tobacco, and even a stake in Juul, a controversial but popular e-cigarette maker. British American Tobacco, a global giant puffing away. Across the pond, we have British American Tobacco, or BAT for short. Think of them as Altria's globe-trotting cousin. BAT boasts a vast international footprint, selling its products in over 180 countries. Their brand portfolio reads like a who's who of the cigarette world. Dunhill, Lucky Strike, Pall Mall, you name it, they probably own it. BAT's strategy is two-pronged. First, dominate emerging markets where smoking rates remain high. Second, just like Altria, invest heavily in developing next-generation products like e-cigarettes and heated tobacco. Financial face-off, profits, dividends, and market muscle. Now let's talk numbers. Because at the end of the day, investors want to know one thing. Can these companies make me money? In short, yes. Altria also owns about 8.1% of Anheuser-Busch InBev, even though it sold enough shares of the beverage company to gain $2.4 billion in March. Altria Group intends to return the proceeds to investors in the form of share buybacks. Altria's net income has been going up steadily over the last 3 years as well. Their historic lowest PE is right around 9.5. As of June 15, 2024, Altria's PE 8.83. Adjusted operating earnings growth rate is 7.53%. Fair value ratio is 15 multiples and normal PE ratio is 13.98x. And as mentioned previously, it is currently at 8.8 multiples. And current dividend yield is about 8.8%. It is BBB rated by Standard & Poor's with high long-term debt to capital ratio of 125.66% and market cap of around $76 billion. If, by the end of 2026, company will recover back to their normal 5-year PE multiples of 10.24. Total rate of return would be around 50% from today's date. If one would have invested at the last historic lows of 9.15 multiples in 2008 and held until next lows in March 20th, 2020, that person would have almost quadrupled their return in 12 years. If you find these analyses helpful, don't forget to like, subscribe, and share this video. Your support helps us bring more insightful content to you. Thank you. Now, let's look at British American Tobacco, who is writing down $31 billion in assets, primarily due to the declining value of its cigarette brands. The shift in consumer preferences away from combustible products drove the decision. Altria's operating and net cash flow has been going up over the last 3 years as of June 14, 2024. Their current blended PE is 6.53. Earnings per share is 15.31%, with a dividend yield of 9.57%. Operating earnings growth of 6.41%. All-time historic value ratio is 15x, and all-time historic normal PE of 13.25 multiples. Company is BBB+, rated by Standard & Poor's with 38.36% long-term debt capitalization. If by the end of 2026 the company will recover to the 5-year normal PE of 8.36 multiples, $10,000 invested today might yield a total of about 69%. if an individual would have had invested $10,000 in April 10, 2009, when the last time company's PE was 10.79 multiples, and held it until June 14, 2024, that $10,000 would have been worth around $28,000, with $15,000 would have been in dividends. Beyond the smoke, new frontiers in a changing landscape. So, how do these tobacco giants plan to survive, let alone thrive, in this hostile environment? The answer lies in diversification. Both Altria and BAT are pouring billions into developing and marketing what they call reduced-risk products. Think e-cigarettes, heated tobacco devices, and even nicotine pouches. The jury's still out on whether these products are truly less harmful than traditional cigarettes. But one thing's for sure, tobacco companies are betting big that these alternatives will be the key to their future. The future of smoke. A concluding puff on tobacco investments. The future of the tobacco industry is, well, hazy. Governments will continue to crack down, health concerns will persist, and the long-term viability of reduced-risk products remains to be seen. Investing in tobacco is a calculated risk. It's a bet that these companies can navigate the regulatory minefield and their growth in the potential financial market downturn in the next 10 years by successfully transitioning to new products and continue to generate profits for their shareholders. So, is it a risk worth taking? That's a question only you can answer, but one thing's for sure, in the world of investing, the only sure thing is uncertainty. It can be minimized to an extent but not eliminated, and the tobacco industry, for better or worse, is a prime example of that. Don't forget to like, share, and subscribe to stay updated with the latest stock showdowns. Your support helps us grow and reach more viewers.